Welcome back, everybody. And one thing I've been discussing on the channel is that small caps are going to be doing very well, in my personal opinion. And I think we're in a situation where, we've seen the price of gold go up, we've seen the price of silver, all these things have been doing great in terms of the overall stock market. We've seen stocks at record highs. But one thing that we have not seen are small caps. Now, small caps are those companies that are kind of forgotten about a lot of times. And I've discussed small caps many times on the channel, and I've always thought that we're going to be entering another small cap rally at some point here soon. And I think it could be, sooner rather than later, because we're at a point now where small caps are significantly undervalued relative to the overall stock market. And if you look at the total indexes and where they're trading at, the large indexes such as the Dow Jones, the S&P 500, and the NASDAQ are basically all at record highs, especially the NASDAQ. The tech stocks and all the AI stuff is skyrocketing. And then you have interest rates on top of that. So what I did is I wanted to find a search of the best small cap ETFs, because I think we're in a position now, especially with interest rates coming down, where there's going to be more of an appetite for risk on assets. And that includes small caps. And small caps have historically been the ones that I think have lagged behind relative to the overall stock market, the larger indexes. And if you actually look at some of these indexes like we're going to today, you'll see what I'm talking about. Now, you can look at the actual Russell 2000 itself, but this one tracks the Russell 2000 index. So IWM tracks the Russell 2000 index, representing the smallest 2,000 companies in the Russell 3000. This ETF provides broad exposure to small cap U.S. stocks, offering potential for growth as these companies expand. So we have high liquidity and a low expense ratio. Those are some of the benefits that is listed here. And this is on Daily Investment Advice Pro. You can check it out in the description if you're interested. Monthly, but you get access to all these premium features, especially this one where you can look up opportunities like this at your fingertips. No more endlessly searching through websites and trying to find detailed data on stocks. You can also come on over to, for example, if you type in IWM on the same search bar, you can get the top holdings, which is cool as well. So I've actually been able to program this thing to give you not only like ETFs, but if you want to find out the top holdings. Sometimes it struggles a little bit, like it missed the price on this one, but we're still working on that. So overall, if you come over here, you can type in like an ETF. It'll give you the top holdings a lot of times, or you can type in the best small cap ETFs, for example, or whatever you're looking for, and you can find those specific opportunities. So that's the first one, IWM. Looking at the history though of the Russell, you can see that over the last 5 years, what's been going on here? I mean, we have stocks at record highs, the S&P 500, the NASDAQ going crazy, and then this one is just now hitting the highs that we saw. I mean, the highest we've seen this thing in the last 5 years is around where it is right now. So we're just now breaking out to all-time highs. Why has it taken so long for the Russell to break out? And I think it's just one of those things that, first of all, interest rates have been elevated. So that is not helpful when you're thinking about small caps, because small caps tend to be higher risk overall. And so it's just one of those things, like compared to the large cap stocks, the ones that are more established, the ones that are more profitable, these types of stocks are kind of a bit lagging behind, and they have been. And unfortunately, that's just how it is. But if you look at the max chart, obviously, like this goes back to the year 2000, we've had a pretty good run in small caps. But over the last 5 years, we've kind of been in this sideways trading pattern. Now look at the NASDAQ, right? Just look at the NASDAQ and the difference between in the last 5 years. It's just a straight shot to all-time highs. There's not even a comparison, because around the same time period, you're trading at $400. Now you're trading at almost $600 for the QQQ. Same for the SPY. Not quite as extreme, but I mean, look at this over the last 5 years, the return here. The last time that, the Russell still lagging behind at these levels, right? It's just breaking all-time highs. So there's really no comparison between small caps and, what you're seeing here, because around the same time period, like I said, we're just now breaking out. I mean, like I said, it's been a sideways pattern for a long time. So this is just one example of an ETF. You can also come on over here to, if you come on over to the investment elite stock and ETF research tab. Once again, this is part of Daily Investment Advice Pro, but I like to use these tools in my videos to help you guys and, show you what they look like, right? So this one is rating the Russell 2000 as, let's see here. It looks like the confidence, it says hold the ETF. So we have favorable fiscal policies as well down there. I know my camera's kind of in the way here, but there it is. Favorable fiscal policies, economic recovery as well. So we have $238 a share. Now these quotes, I just updated this, so it's going to be around that price. But it's basically estimating that we could hit, 245, 250, 270. I would like to hit 300, honestly. I think it's well overdue. And I think that would be a big boost for small cap stocks, obviously, because those are the assets that make up the index, and a lot of those stocks are going to start doing well, I think, especially with lower interest rates. As we get more interest rate cuts, I would expect small caps to keep on going up. I think we're just at the beginning here of a big small cap rally because it's long overdue. It's long overdue. So IWM tracks the Russell 2000 index comprising 2,000 small caps U.S. companies. The ETF has a total expense ratio of 0.19 with assets under management of approximately $71.39 billion. Not bad at all. So, yeah, there it is, guys. IWM. Let's move on to the next one, though. What do we have next? We have the VB, or the Vanguard Small Cap ETF. In fact, let's come on over here to the Professional Stock and ETF Research Tool and get a report generated on this one so we can start researching this one because, have I heard of this ETF? I don't know. Have you guys? Let me know in the comments down below. But hope you guys like the movie background, by the way. All the posters. This movie, it is what it is. But the one next to it, Ferris Bueller's, you can't go wrong with that one. All right, so here we are. Vanguard Small Cap ETF offers a diversified exposure to U.S. small cap equities, presenting a compelling opportunity for investors seeking. Now, this one's rated as a buy, apparently, so here we are. And keep in mind, take these recommendations with a grain of salt. Artificial intelligence is used in these recommendations. Now, it can give you a good amount of information quickly if you're looking for information on stocks. That's why I love it, because it's information at your fingertips. And we've programmed this, or I have, it's a one-man operation, to give you the resources you need to help you as an investor and to find opportunities in the market that otherwise may take longer to locate. So this is for you guys, right? But, just take the buy recommendations, the hold recommendations, obviously based upon your risk tolerance and investing goals. That's the main thing. So as we're seeing here, price of $252, we set a 12-month price target at $275 and 24-month. Now we're talking $300, right? So indicating a potential upside of approximately 9 and 19% respectively. So I'll take this one. Yeah, $300, okay. But I'd like to see that in the next 12 months. Let's see if we can get that in the next year and really have a good small cap rally. This U.S. small cap index it basically has 1,500 small cap U.S. companies, has a low expense ratio, so lower than the last one, which is nice, and it enhances its net returns. Its weighted average dividend yield is 1.95%, okay? Anyway, so pretty good expense ratio there. It looks like it's lower. Obviously, you should fact check this as well. Like, I should probably look into this just to make sure. I can go online to make sure these expense ratios are accurate, and you can tell me in the comments if this is wrong as well. But and that'll help me also in the future when I'm trying to correct some of these data points as I'm programming this app that I've built here. So, but anyway, my goal is to help you guys too, though, and give you guys information, and that's what we're doing, right? We're going over these ETFs that can help you if you're looking for small cap opportunities. You clicked on this video, so here we are. The third one, the Schwab U.S. Small Cap ETF. We have SCHA, and actually, let's look at the Google chart on VB. I'm curious how it's fared. It probably is kind of similar to the other ETFs in terms of performance, because now this one honestly has fared a little bit better, I think. Since 2021, it is actually breaking out of those. Like, it looks like it's breaking out of the range entirely, so it's kind of hitting all-time highs. It needs to hit 260 again, I think, and then we can really be in the breakout zone. But we have the next one here is SCHA, the Schwab U.S. Small Cap ETF, and we will take a look at this one let's look at the last 5 years. Kind of a similar pattern, just a sideways trend, but just now breaking out of those highs. The real all-time high is going to be like $28, $29, $30 over the last 5 years. If we can break that $30 level, I think we can really hit some blue skies here for the Schwab. That would be the Schwab U.S. Small Cap ETF. Let's take a look at this one. I used to work for Charles Schwab as a registered rep, for those of you guys who are wondering. So, this is a good company. It really is. And they treat their employees well. I don't know how their financials and everything have been going lately. I don't know how they're, if they're doing layoffs or what. When I worked there, it was pretty stable. It was back in 2021. We had a good run there, let's just say. And it was fun. I enjoyed my time there. But anyway, the Schwab U.S. Small Cap ETF, SCHA, offers diversified exposure to small cap U.S. equities. aligning with income generation and wealth building objectives. With a current price of $27.62, the ETF presents a favorable entry point supported by a 12-month price target of $30 and a 24-month price target of $32. All right, fine. And then we have a low expense ratio of 0.04. So there it is. ETF holds 1,706 stocks with top holdings in sectors such as biotechnology and technology. Expense ratio 0.04 below the industry average, enhancing the net returns. So there it is, guys. We have the SCHE or the Schwab. Let's see here. Let's find it again on here. The Schwab US Small Cap ETF. So similar to all these, you could really build a portfolio of all 5 of these ETFs we're going to discuss. We have 2 more on the list, but it's up to you how you want to go about it, obviously, based upon your risk tolerance, your investing goals, etc. But we have this one, VIOO. We'll generate a report on that one. And one thing I want to show you, I think I showed you this in the last video, you can actually download these reports as well. So if you're curious of getting like a printout or a PDF to help you, for those of you guys who want to actually like read it in front of your, and look at the metrics in front of you, you can print it out, you can download it as a PDF, whatever you guys want to do. So I'll do that for this one here. But we have the Vanguard S&P 500 Small Cap 600 Index Fund. How has this one fared? Well, we're not even at the all-time highs that we've seen. Well, overall, we're kind of in the same sideways pattern that if we break out of these levels, right, the peak here, it looks like is 116. So let's really get above 120. I mean, the 52-week high, as you can see, is 119. I think that's going to be some resistance there we need to break out of because even since 2021, this thing has just been trading sideways. And so we're going to have another opportunity, I think, in this ETF, but it's just a matter of time and chance, right? And I think, like I said, with the favorable liquidity and the interest rates coming into the market, especially with lower interest rates and everything going on, I would say we're going to be in good shape overall. And I think in terms of this ETF, in terms of all these ETFs, I think they should fare well. And in the meantime, if you think it's going to keep on trading sideways, you could always do covered calls, cash secured puts. You could always do that type of move where you kind of do the wheel strategy and make some extra income. Of course, you're risking, a big move in the ETF on some favorable interest rate moves or some favorable news for the markets or something. So that's a consideration as well. But you could also do the wheel strategy where you hope that the options expire worthless and you just kind of play around with it to make extra income. That is an option. No pun intended, right? For those of you guys out there who want to do something like that. Finally, we have the Spider Portfolio S&P 600 Small Cap ETF. But before we get to that one, real quick. So the Vanguard S&P 500 Small Cap 600 ETF, VIOO, offers diversified exposure to 600 U.S. small cap companies aligning the client's objectives of income generation, wealth building, and retirement planning. I think that's mine. It's because I have my portfolio set up on here. That's why, when you sign up, you can choose your risk tolerance and investing goals, and you can upload your portfolio and stuff if you want to. So, but that's why it's telling me this, right? So, key catalysts include the anticipated economic recovery, favorable small cap valuations, and VIOO's low expense ratio of 0.10. So, risk include market volatility and potential underperformance relative to large cap indices. One other thing here is the support and resistance levels. It gives you everything: the strategy, the risk analysis, interest rate fluctuations, like we've been talking about, underperformance relative to large cap indices, market volatility, etc. So if I want to download the PDF, I just basically hit the download button, and boom, we have an entire research report. Now, like I said, take it with a grain of salt. We're not a registered investment firm, so. But it does tell you who it's for. Even if you to tell you, oh, it's for me. AI generated me a research report that is going to help me as an investor, right? And it's going to help me make better decisions potentially if I'm able to see the data in front of me and I'm able to look at this from a holistic perspective. I can look at 10 stocks, 10 different reports, find out what is a good ETF maybe to invest in. But a lot of this, just take it with a grain of salt because it is entertainment. It is fun. These are part of the tools you'll get with the pro subscription, but they may not be based upon your risk tolerance and your investing goals. And so that's always going to be a consideration. But with that being said, let's get back to it. This has been the Vanguard Small Cap S&P 500 600 ETF. Finally, we have the Spider Portfolio S&P 500 600 Small Cap ETF. I think these are going to be similar strategies. I'm curious how similar the chart will look because they're probably going to be pretty similar indexes, pretty similar strategies, maybe just some wrappers, right? So it looks like, yeah, pretty similar returns, different pricing, but it looks like they're tracking pretty much the same index here. So I'm curious how the pricing looks in terms of this ETF because if we look at the expense ratio for VIOO, I believe it was says 0.10 for the expense ratio. So I'm curious what this one is, because it looks like pretty similar returns, pretty similar index overall, and the strategy itself is going to be very similar. So let's see how this one turns out. So it offers exposure to U.S. small cap equities. Its low expense ratio and diversified holdings are attractive. The ETF's performance has been volatile, with a 1-year total return of 7.53%. Okay, let's see here. And then let's see if we can find the expense ratio. 0.03 is what it says here. So 0.03 expense ratio for SPSM. Once again, make sure you're fact checking this. I should be as well. And I oftentimes will find myself fact checking my own program to make sure that these facts are correct. So far, it's been doing a pretty good job today, but sometimes you have to tweak it and you have to change some of the, I guess, the prompting and what you're putting into it and feeding it in terms of data. And that's for anybody, even with the help of AI generating some of this. Like, you have to still think about like how you can generate recommendations that are accurate, that have data that's accurate. And so, you have to try to avoid the hallucinations, obviously. But it looks like this expense ratio is lower than the other one. So SPSM, if we look at expense ratio, 0.03, I believe it says, right? Pretty low. Yeah, there it is, 0.03. I mean, so the previous one, if you look at the same type of strategy, 71.63% over the last 5 years. This one, a little bit more, but what was this? It was a 0.10 expense ratio, right? So if we have, that's for SPSM. I want to do VIOO though. That's for the 0.03. I want to see if this one is actually 0.0, because they're pretty much the same strategy, like I said. This one, now it's saying 0.07. So it is a little bit more. Here it is, 0.10 expense ratio. So yeah, right around 0.01. Now this is saying 0.07, so 0.01 though. Maybe depending on where you invest, if you have an actual Vanguard account or you don't. Sometimes I think they maybe lower the expense ratio. But it looks like this expense ratio is a little bit more, not by much, only a few basis points, but relative to SPSM. Which one would I go with? I'd go with SPSM, because it looks like they are essentially the same type of ETF. That's my personal opinion. But the small cap 600 index, same thing. And so, yeah, they have the allocation and all that. They have everything there for you. The strategy, you have holding period, risk analysis, economic, interest rate risk, liquidity, all that kind of stuff, right? So this is the portfolio S&P 500, 600 small cap ETF, SPSM. And this has been 5 small cap ETFs. Once again, this was used by Daily Investment Advice Pro. It gives you everything you need here. In terms of like the opportunities in front of you. Type in best small cap ETFs, type in dividend stocks, to buy now, something like that, right? It'll give you a search and you can do it all over again. Undervalued dividend stocks, etc. So it's really helpful. In fact, let's try out undervalued dividend stocks. And it is in the description once again if you're interested. But this has been 5 small cap ETFs to help you as an investor if you're looking for small cap opportunities. Because like I said, I think small caps are one of those types of stocks that will do well, because we are in a period right now where they have lagged behind. Let's just be frank. They have lagged behind, and we need to see those small caps, kind of catch up a little bit to the rest of the market. That's my personal opinion, especially with the liquidity increasing, and that means risk should be increasing as well. Interest rates are coming down, so people are going to be searching for other types of risk assets. So there it is. Now, ExxonMobil, Chevron, Coca-Cola, Pfizer, Phillips Morris International. So 5 dividend stocks right there for you with nice, sustainable dividend yields. It says sustainable. Some of these are going to be dividend aristocrats or even kings like Coca-Cola, ExxonMobil. I think Chevron too, if I'm not mistaken. Pfizer has been increasing their dividends, I think, the last 15 years. So 5 recommendations for dividend stocks right there. This is part of the pro subscription because I want this for people who are serious about finding opportunities, serious about, finding those things in the market that might help them, those tools. And there's a lot more tools. These are just a couple of them that I've been demonstrating on the channel. So I'll try to cover more of them as we go along. But thank you so much for tuning in. Hope you all enjoyed this video, and we will see you in the next one. Take care.